Man, no, I got what you said. I took a couple notes. There's a few things that are going to be off. First of all, your projections are off. So you use GPR, which is gross potential rent, but you failed to factor in a few things. You didn't factor in vacancy and in-place rent secured by leases. So if you're using potential rent, that means you're not factoring in what we call loss to lease, right? So if you have in-place rent at $800 a month, but market rent is $1,000 a month, that's a loss to lease of 200 bucks. And then you look at how long the remaining term of that lease is, and then you multiply 200 times that, and that's going to be your loss to lease amount. So what I would do is, and it wouldn't be a huge deal, but you're in a rent controlled environment. So they're marketing it to you based on there being meat on the bone for you to increase rents and make all this money. So what I would do is I would take the loss to lease amount. I can help you calculate that, and then negotiate that as a credit during the purchase, and then you won't have that issue. Another thing you did was you underestimated the property taxes. So you use the current property taxes that they were paying at the time. So it's going to reassess when at transfer. So you're going to have a new property tax rate. The other issue for your other property, the evictions. So it's not the evictions themselves. The problem is with your screening process. You have to be stricter on your screening process. I can help you put a process together so you won't run into those things. Also, you're doing a lot of Section 8. Keep in mind, if a Section 8 tenant moves out and tears up your unit, you're only going to recap whatever their deposit is. Who are you going to go after that? You're going to spend the money to go after a judgment and do all those things. So that's money gone, right? So the screening process isn't strict enough. Your deposit accounting process is too aggressive. So I looked at some of the receipts that you sent me and some of your deposit accounting paperwork, and your issue is you didn't factor in the useful life or depreciate the useful life of your big ticket items. For example, let's say flooring, right? So if I have flooring that I put in brand new, that's going to be 5 years of lifespan for that flooring. So if I have to replace it after the first year, I'm going to bill them back for 80% of it. Second year, I have to replace it. I'm billing them back for 60%. Third year, 40%. Fourth year, 20%. After 5 years, I'm not billing them back anything because the useful life has expired. So take all of this information. First of all, do you know the lesson Landlord Launchpad on our website, the one that I sent you first, the link? You that covers all of this. So if you're going to be a landlord, that covers everything. And I was overseeing $650 million in multifamily commercial assets. That's over 3,000 units. So everything that I accumulated, all that knowledge I put into one guide. So just go to the website and get it. I'm going to send it to you for free because if you'd got that, you wouldn't have had to do a consult and we wouldn't be having this conversation. But those are a couple of things that I noticed right off the bat. So address those, and then let's get back on a call, and then I'll help you with the other stuff. But those are your biggest issues, and we'll take a deep dive into all of your projections, because there's a few other things I noticed, but I want to tackle the big stuff first, and then we'll get with the smaller stuff. Just call me directly. Don't order a consult or schedule an appointment. Just call me directly. I'll get you squared away. Amen, brother. Right. Is it 25 bucks? You paid $350. You could have did this for 25 bucks. No, I'm gonna send it to you, but you'll see it's all. As a matter of fact, I'm gonna send it to you, and when I send it to you, and you finish reading it, reach out to me. I guarantee we won't even have to have another call. I bet you. So, all right. Good luck, man.